And that means we are now live here on our YouTube channel. It's our daily show where we go through the markets one step at a time, called the Halftime Report here at tackletrading.com. And we're going to break those things down with Coach Frank and Coach Matt and myself here today. Welcome out, everybody. Hashtag Team Tackle right in the chat as you're coming into the show. Let's have some fun today. Let's keep it lively. Let's keep it, focused on markets and all the things that we always do. And if you are a brand new member of our community, welcome to Tackle Trading. Number one, make sure that you do click subscribe, click the bell, come back and join us on a daily basis as we do these shows. Let's bring in the boys here. Matt, first off, how you doing, sir?
Tim, I'm doing absolutely fantastic. I'm excited to be here for another edition of the Halftime Report with the crew.
And Coach Frank, as always, Friday. How are you, my friend?
Doing well. Always excited to be here. Even more exciting the day of after the first round of the NFL draft. So it's been like a really great 24 hours for me. I got to hang out with you guys. I got to watch the draft. I get to watch more draft. This is a really good Friday. They're all good Fridays, though.
They are exciting Fridays. I always enjoy, each show that we do, and specifically this one, Frank. You've been coming on Fridays now for quite some time, and it's always a fun one, focused on technicals, heading into the weekend, thinking about rankings, talking picks, talking potential chart setups, and all that kind of stuff. And you've got to be happy here today, Frank. We are now official at least 50% the way through earnings season, so we're getting there, my friend.
Yeah, next week at this time, I'll be thinking, yeah, we've made it, right? We've got one more. 120 something S&P companies next week, but then they're the stragglers, right? So one more week for those of you out there who are like me and just not a big fan of earnings season. One more week to grind through, and then it'll be back to business as normal, hopefully, till next earnings season comes around.
That's right.
Well, and we are officially halfway through, but to me, like it's pretty much done.
Yeah, we're over the hump.
Like once you get this week, right? You get the Apples, the Facebooks, the Googles, the Amazons, once you get those names out there, we're pretty much to the back half where we're talking next week on. And again, there's just a difference in importance of name here, but we're not talking Google, Amazon, Apple, Facebook next week. We're not talking like we were the week before with Netflix and Microsoft, or the week before with all the banks and whatnot. You're really talking PayPal, T-Mobile, Square, Uber, GM, like Activision. So you got some important names, no doubt about that. And obviously you got a lot of navigation when you're talking about being a trader there. But coming into this week, there was not a lot of great swing trades, in my opinion, with all this news. Post this week, I think you might have some better swing trades setting up.
And I do want to break all those things down here just momentarily and go through the whole markets. I would be remiss, and I would not fulfill my promise to Coach Emily if I didn't do this right now, though. Head to tackletrading.com real quick, Matt. We have Women in Trading tonight. As we get started in the show, I usually like to promote anything like this that we're doing. The Women in Trading event is tonight at 8:30 p.m. Eastern. Ladies out there, if you're interested in trading, if you're interested in investing, you're here, obviously. This is a free event. You can come and attend it, and there we are right at the end of the month. The mastermind group is live, and Coach Emily wrote a wonderful blog today comparing the difference between cover calls and naked puts. It's actually on the main page there if you want to take a look at that one, Matt. Not in the tackle today on this one, just right on the main page for Women in Trading. And she looked at silver and she compared how would a covered call look or a naked put be between those two. I thought it was wonderful writing, wonderful analysis. I will drop the link in the chat for anybody out there who wants to read that blog. Maddie, we love the Women in Trading group, and we want to support it each and every time we can, correct?
100%. Love what Emily's doing with Women in Trading. She does an absolutely fantastic job, and she still does not allow me to come in.
I haven't been able to sneak in. I know we joke, but no, that is not for us. So.
You joke. I've tried. She finds it. Yeah.
I got you.
I even put a wig like the old Europeans did. Doesn't work.
Doesn't happen.
I got it in my closet. Played a little dress up. Doesn't happen.
All right, let's break down markets one step at a time
Yeah.
here. Obviously it's been an interesting week. We've been packed with news, Fed meeting and earnings season, all the companies you mentioned, Amazon, another one here after the bell yesterday, just absolutely smashed their numbers. We'll talk about that in a minute. But it's been a muted price response from the market, Matt. A couple, three dojis coming in. Little rally yesterday, giving it back today. We've basically been unchanged for the week, but that doesn't really tell the story. What is your read here on the market?
The question we've been talking about the last couple of days is, especially on the backs of what we've been seeing in just some very, very positive earnings numbers, right? Maybe muted responses to those numbers, but extremely positive numbers. And Amazon was no different today. After Apple reported, we were talking about, what was Amazon going to do? And I made the point yesterday. I said, this market's not waiting for anything at this point. Everybody in the world and their dog knows that Amazon's going to come out and post some very impressive numbers. And Amazon did just that. They posted some extremely impressive numbers the same way, Microsoft, Apple, Facebook, all of these posted some extremely impressive numbers. But we have seen a muted response to the market. And, given the fact that, this market was very hot coming into earnings season. And we've talked about how responses to earnings sometimes justifies that previous price response. And a lot of, trading participants right now are looking at the numbers that are being posted by the market, and they're saying the same thing that we were talking about yesterday. Why is this not up more? Why, when Amazon reports such a juggernaut report where they report 1579 EPS numbers, the expectation was 975. Revenue came in hot at 108 billion versus the expectation of 104. That included a what was it, about an 8% increase in guidance as well. And so not 8, it was 3% increase in guidance with a net profit of $8 billion. Think about that, a net profit of $8 billion. This was just 5 years ago where we were talking about Amazon not making any money. They showing profit now at $8 billion, total revenue at 108.5 billion. I mean, these numbers are just sexy. They're just sexy as all get out. And what's Amazon doing today? Up 1%, right? That muted response is and rightly so. I think the market participants are saying, why are we not up more? Well, when you take a look at the market, and a couple of weeks ago we did this podcast in the Trading Justice podcast on the market expectation and how to set an expectation and understanding responses to earnings. So if you haven't had a chance to review that podcast, please do. I think it might help in understanding kind of what I'm talking about here. But when you're talking about a marketplace, the S&P, and when you're talking about this market having a robust quarter, a robust trend, but look at the previous month before earnings. This is JP Morgan. This is finance week right here. This is finance week. Look at this market coming in earnings. Up, 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 up. Well, what happens, guys, a lot of times is this is what would have transpired on the backs of earnings, but it got front ran coming into it, which means these positive numbers are justifying this previous movement. And that's what you hear the conversations. And I'm sure many of you out there in tackle trading land, you hear that baked in concept, right? Well, it was already baked in. Well, that baked in is based on this type of price appreciation as you're coming into earnings season. And what earnings season does is it justifies the previous quarter, and it gives us a little bit of an understanding of where price could go in the future. And so I see this, and I see it this week, but I saw it last week as well. And when you're looking at it technically here, I think what you're reading of the market is, yeah, we haven't got that up that we thought we could get on the backs of these very impressive earnings numbers. But what you did get is a market that played defense. And that defensive nature of the market, I think, is very important in the short term, as long as these technical support levels do not give. that question of why the market is not appreciating a little bit more on the backs of some very impressive numbers is understandable given the backdrop of what the market was doing coming into earnings season. And then you see the defensive nature of the market still giving you the understanding that this market is not exactly in a mode to sell. It might not be in a mode to buy, given the fact that we're have that philosophy of baked in, priced in, priced in, priced in. And you know how much I hate when people overuse those types of terms, but I do think there is some legitimate analysis right now of this market being just really hot coming into earnings numbers being extremely impressive, justifying that price action a little bit. And that question of why creeping into our heads a little bit maybe will stop us from doing some trades that look pretty decent. And what I mean by that, guys, is take out the response, the muted response to some really good earnings numbers on Amazon, right? Mm-hmm. And guys, I've seen Amazon on very positive numbers be up really, really healthy post earnings. Right now, you're in a little fade action in Amazon, right? Well, does that discount, is that question of why Amazon's not up more? Is that question going to stop people from looking at this weekly chart and seeing that breakout on Amazon?
No.
Nope.
No, it's not going to stop me. Not going to stop Frank.
So to me, the muted response is like, yeah, why is Amazon not up more, right? It's that little question. But again, that technical breakout on Amazon's legitimate. In fact, the breakout king, we have the breakout king here, Frank Martin. Frank, what's your read here on Amazon with the breakout on the backs of, obviously not a great response to the earnings numbers today, but when you take into account this week, closing above the resistance channel, Amazon breaking out fundamentally. I mean, people are looking at Amazon saying, what else do they need to do? This is an amazing report. What's your read?
Yeah, you're glad that it didn't just have that huge gap, right? That pushes you right through that resistance and you have to basically wait for something else. Is anybody here going to be surprised if, by the time we start working into next earnings season, we're having the Amazon at $4,000 conversation? Well, I know they're maybe splitting, right? That's not official, but assuming they don't, this is a really clean little breakout. I'm glad it didn't break today. I would love to see a little bit of a shallow pullback early next week. Maybe it takes the broad market to do that, to get that with Amazon. But that break of that, I'm going to call it 36, just to make sure we have a nice round number to work with. Very legit. Honestly, this is about as clean of a breakout as you can find. I would love to have it cook a little bit, but I may not get that. I can't see any logical reason why somewhere in the not terribly distant future, we're not having does $4,000 play a role here on Amazon conversation?
Mm-hmm. Mm-hmm. No, I would not be surprised at all if we're talking about Amazon trading into those levels if you catch a breakout, because these long-term charts, that weekly chart right there is really impressive. And one thing you said earlier today, Frank, when we were talking about this in pre-production is, you didn't think Amazon did a lot. And then you go to the weekly and you're like, oh, that's a pretty good candle. Even pushing into these kind of technical zones, Matt, it's had a really good week. And
well, it faded up throughout most of the week, right? Mm-hmm. I mean, that's what it did. And that's kind of what grinded this fairly impressive candle here on the breakout. But again, Amazon's been doing this all throughout this. They've been doing that. They've been reposting great numbers last quarter. They posted great numbers the quarter before. Amazon's numbers have been very, very impressive. What they have yet to do on these very impressive numbers is break out of 3,400. And not only have you broken out, and not only are you going to confirm above 3,400 today, you had a consolidation high base scenario forming. Instead of coming from 3,000, now you're coming from 3,300, which means you're not exactly overextended coming into that breakout. When you look at this technically on Amazon, I don't see how you can look at this and say we're not in front of some price appreciation here.
Mm-hmm. Mm-hmm. Yeah, it wouldn't surprise me at all.
I mean, technically, you never know what the market's going to do. Or market can do a lot of different things, but technically speaking, I think you got to like this breakout, even if it's not on the backs of, a beautiful market response. You take into account the week, you take into account kind of the breakout and the importance of the breakout, and you take into account that Amazon was, was hinting towards some pretty big things that didn't transpire yet. And so maybe that's causing a little bit of the muted response as well. But I'm looking at that weekly chart, and I feel that weekly chart is what really is telling the story on Amazon today.
All right, I'm going to try something right now, see if it works. The longer the churn, the higher the burn. Can we, is that okay?
I'm not going to veto it. I want some time to think it through a little bit. I'm gonna marinate on over the weekend. It's not a hard pass.
You tried to trademark something that's been said many times. No.
All right.
No.
Well, Tim, I tried. See, this is what happens.
In fact, I think Tyler said that 4 months ago on the halftime report.
Uh-oh.
I was trying to remember.
I'm going to find it. Tanyan, find it.
Oh, poor Coach Tyler. I'm trying to take his catchphrases, I guess.
Or Tanyan, he has to go through 4 months of listening to you guys to find one clip.
That's funny. I'll tell you, though, I love...
Was that the equivalent of our father telling us to go dig a hole?
Yeah,
it might have been.
It might have been.
Listen, I learned a few tricks from Mark Sr.
Yeah. You're not doing anything? Go dig a random hole, 4x4x4. Why, Dad? I don't know. Throw some rocks in it, but get it done.
He was you got to be moving kind of.
If you're not doing something, you're lazy.
Yeah, you don't have to move 1,000 miles an hour. You just got to stay busy, man. How many times did he tell you that? You got to stay busy, keep moving, keep working. Yeah, but pick up rocks. All right, longer the burn, the whatever it is, didn't work.
The man had us pick up all the rocks on the hill one day.
I know. We
got dad stories. We got dad stories. Podcast.
Fair enough. We could do a whole podcast on dad stories from work, no doubt about it. All right, let's go back to the markets. Let's flash through them real quick. We'll do a full earnings roundup a little bit later in the show. And then Coach Frank, I believe you got some charts for us today.
I do. I got a few I want to take a look at with you before we get out of here.
Very good. Very good. I think that the market conversation is the same across all the indexes, by the way, Matt. I don't know if you're seeing anything that stands out between the four of them that you want to highlight, but
not really.
Very similar.
No, not really. I don't think anything has really changed in terms of the market indexes themselves. You're still looking at that 2,300 potential breakout on the Russell 2000, and you're still looking at this as, if it does break out at 2,300 and we start seeing a little bit of action, you could see a little catch up in a market that has really stagnated over the course of the last, 2 months or so. But in that stagnation, this technical is outside of one dip here, which was really kind of a market heavy sell day. Outside of that one dip there, you got a fairly consistent technical read here. 2,300 is obviously playing, slightly north of 2,300 is playing a fairly consistent resistance role. Support levels have been consistent. So you're still looking at that $2,300 breakout and saying, if we can achieve that and if we can close above 2,300, I'm not going to be too concerned about this slowing momentum head in the head and shoulder Batman type technical formation. I do think that certainly can be triggered there. We could see a little bit of catch up in the Russell 2000. So that's a little exciting from an anticipatory perspective. When you're looking at some of the other indexes out there, NASDAQ consolidation, still looking for the breakout, fairly tight consolidation in the NASDAQ there. We already took a quick peek at the S&P. S&P, a little tiny breakout earlier this week. You can't really see it, but I do think you got to officially call that a breakout. But defense, you got to like the defensive nature. And look at that 9 EMA. Look at that 9 EMA. Frank, why do stocks love the 9 EMA so much? But they do.
It's not my place to question why. They just do. There is enough evidence. There is enough evidence. Yeah. Yep, is the algos and a little bit of magic. Come on, it's Friday. A little bit of magic going on. Little magic.
Whatever little Harry Potter action.
Exactly. Well, I don't know about that. I would say maybe Game of Thrones, Lord of the Rings. I don't.
That type of magic. Okay. We're not talking the wand type of magic. All right.
Listen. Well. That's a conversation for another day.
I'm gonna have to work on my Harry Potter technical analysis. That's what I'm gonna have to work on. But you gotta like the defensive nature of the market in the S&P over the last 5 days. Again, mostly positive earnings numbers, muted responses. Economically, the reports coming out this week have been pretty impressive as well. Personal spending was extremely impressive coming out today. So you've had some positive data. You just haven't seen the market follow through on that positive data, but you're clinging on to the fact that it did play some defense. And so No, I don't think there's a discernible difference in the indexes as we were looking at on Monday, coming to the completion of this week on Friday. I don't think you're looking at any substantial change in rankings as you're looking at the indexes. The Dow Jones, literally, I mean, it's a week later, it's the same analysis. Like literally, it's done nothing. Just consolidate a little bit, little up, little down, nothing. Still looking at the breakout there. So, no, after a very hot week and a lot of news that came out this week, technically, I think you're in the exact same scenario this week that you were last week. But now you're on the backs of a lot of those very important earnings numbers. And if we do see some technical triggers to the top side next week, I think it's going to be a good week in trading.
While we're on equities here for just a minute, because after we do our halftime report, we always go into our scouting report meetings. Coach Frank and Matt, myself, and all the coaches, we start looking at all of these components, start ranking. Was there anything in these sectors, guys, that grabbed your attention this morning?
Yeah, when you're looking at the sectors, you're looking at, say, materials here. And, we've had a couple of the miners come out, negative responses to the miners, but the chemical companies, which are more important to the material space, have been strong. And you're looking at a potential high base with a clean trigger on materials. I don't think you're looking at an upgrade in materials. It's our highest rated sector at Tackle Trading. The consolidation does nothing to change that ranking. It just gets you maybe excited for a potential $84 breakout here. And you know what? You got a couple potentials there that I'm sure we're going to be talking about, Frank, coming into the scouting report meeting in the material space. But from a ranking perspective, no, I think you're looking at the same ranking coming into next week as we came into this week with that consolidation. Obviously, we're going to have a conversation on energy now that we got Chevron, we got ExxonMobil, and we've been waiting for those two. We saw the European counterparts, BP, as well as Royal Dutch, come out, and they start bringing some of that investor money back to the investor class, right? Increasing dividends, stock buyback programs. And it was going to be interesting to see if ExxonMobil, Chevron followed suit. Chevron did raise their dividend a little bit by about 5% to the 4% total. Their raw numbers coming out of ExxonMobil, 65 cents versus the expectation of 59 cents. Revenue came in really, really strong for ExxonMobil. Came in at 59.1 billion versus expectation of 54 billion. So a real good beat there. So a beat on EPS numbers, a beat on revenue numbers, 5.3% year over year revenue. But we're still looking at, all right, are we going to do a little bit more of the British Petroleum and the Royal Dutch Shell, giving back more to the investor class? Exxon stopped short in doing so, but based on what BP is doing, based on what Royal Dutch is doing, I'd be a little surprised if Exxon doesn't follow suit here fairly soon this year. And so a little concern there, but overall, a passable grade and a fairly decent report coming out of Exxon. Technically here on Exxon, a little bit of a nasty, I think you nailed it when we were talking about it earlier, Frank, in the pre-production show, a little ugly snapback here, right? A little ugly snapback, but going to be interesting as you got some fairly important support levels between 57 and literally right where the current price is at 57.5. 57.5 coincides with the old resistance channel right there. You can see that very clearly, very consistent channel. The 57 is this cluster of moving averages here. So if Exxon does show some life here and starts picking up the bid a little bit, could see a good scenario on ExxonMobil moving into the future. Chevron, on the other hand, a little bit more of a nasty, volatile technical pattern where the resistance channel is a little bit more mixed here. And so it probably needs more time than Exxon in setting up, but they're going to do the exact same thing as they have been doing, pretty much the exact same thing. It's just Exxon's a little bit more clean than Chevron. And they had a little bit of a better report, in my opinion, as well. Chevron came out with 90 cents versus the 92, so officially a miss on Chevron. Revenue came in at 32 billion versus the expectation of 30.4 billion on Chevron. And so I would say Exxon slightly better in raw numbers. Chevron increasing the dividend offsets that. So a very similar report out of Chevron overall as Exxon. Now that we're post those big dogs, we got some of the midstream candidates coming out in the next couple weeks. But now that we got the big dogs out of the way with Exxon and Chevron, and we've seen some of the European counterparts already post, I am looking forward to the conversation on energy with the coaches, as we've, we were a little bit concerned 2 weeks ago as we were violating $48. We were a little bit concerned last week, but you know what? The price response in energy this week has probably been as impressive as the price response to any sector this week. When you're looking at the potential, not only in terms of price appreciation on the week, but also in terms of just battling against this short-term negative technical bias that energy has had. Now you're above all those moving averages. It's going to be important. It's going to be fascinating to watch if these moving averages start playing defense, start playing support, and we could see some price projections to the upside on energy again. So energy specifically on the now that we've seen a little bit of those big dog reports, looking forward to the conversation. Most likely going to see an upgrade, in my opinion, on energy. But again, we will. I'll wait to hear all the conversations out of the coaches that tackle on energy. Moving on into some of the other sectors that I think we're going to have some conversations on. Google's breakout this week, but overall, just the communication space has been pretty aggressively bullish. And we saw a breakout on Thursday on the backs of Google. Now we'll see a snapback. So I think you're going to look at communications, maybe hypothetically an upgrade on the breakout, but we'll see that conversation. But you got to love communications right now. Just the breakout was legit. Communications held up when the NASDAQ didn't. It's been a very impressive chart, in my opinion, on communication. So there's going to be an interesting conversation there. Technology, it's going to take us about what, Frank? 5-10 seconds?
Yeah, tech's going to be pretty quick on it. I'm really interested to see if we hold the support zone as we get
the
into
140.
Yeah, I would love to see that. Love to get this clean high base up here for another week or so, because the NASDAQ also has kind of the cleanest top of the index system, in my opinion. I would love to have XLK kind of line up with that. I'm being a little picky here. A little bit of a deeper pullback wouldn't be the end of the world, but I would love to see it hold that 140 going into next week, working our way up and then breaking out the following week. But I'm not afraid to ask for what I want. I just don't always get it. And it's not always what I should have wanted, right?
I'm not either. I ask for things all the time. Sometimes the market giveth and sometimes it doesn't. But when you look at that 140 level on technology here, I do think it's a little bit more important of a support level than some of the other support levels in the marketplace. And some of that is due to the cleanliness of this support level. Look at that 140 every time. 140, 140, 140, 140, 140, 140. If that breaks, there's not a lot. There's not a lot down there.
No, you're probably looking at a little bit more selling in that sector.
At that point, you're looking at this daily chart and you're saying, okay, where? Yep, there it is, right there, 135 and a half, 136.
Yep.
And so, what's going to be fascinating in the conversation, as long as it holds, we're not going to downgrade technology because that breakout's still legitimate. But if 140 does break, you're now looking at a double top, double bottom in the short term with the felt support level, and that has to be downgraded.
Agreed. Yep.
And so, we still got 3 hours between now and the end of the trading day. A lot of things can happen at that 140 level. There's probably going to be a ranking we're going to have to come back when the market closes, honestly, to ensure that 140 does hold. But yeah, that 140 level is a little bit more of an important support level, in my opinion, because if this support level holds, for example, in discretionary, right? If this support level holds right here, where's it going to go? It's going to go here. It's still within the overall pattern that discretionary is going in, versus technology. If it breaks that, then it's coming down here. So it's just a little bit of a more important short-term scenario on technology than it is discretionary in the short term. Don't anticipate any ranking changes in discretionary. Staples is a gobbled mess right now, trying to figure out what it wants to do with its life. And so we're probably going to maintain until it figures out what it wants to do. Two conversations I'm looking forward to is the traditional bullish retracement that formed in utilities. We saw, Duke Energy yesterday in the halftime report talking about Duke with Greg, but also Southern Energy, SO. Southern reported an absolutely fantastic earnings report a couple days back, formed that bullish retracement, confirmed KISS, and now it looks like it wants price appreciation. Utilities, can it follow suit? Can we see that, up? Can we see that bullish retracement really confirm and get back up to 68? I think that's an open question at this point, but the price action does suggest that it is consistent down here towards the lows. You get that doji candle followed by an upward movement of price. It makes me want to bring up Marty. This makes me want to bring up Marty. And if you guys don't know Marty the elephant, it is the mascot at Tackle Trading. He hit the trap held, Marty exploded back up. So utilities is in a fascinating technical scenario, but Frankie, on the week, you're still down on the week. And honestly, this is one of those scenarios, Frankie, and I want you to talk about it a little bit, where you're probably not going to get an upgrade in utilities, given the fact that you are officially down on the week. It's probably just going to be a maintenance. But I like the technical pattern a heck of a lot more coming into this week than I did last week, especially on the backs of some of the utility reports this week.
So yeah, exactly. The one thing that is still really interesting about this, sector overall is about half of the utility companies in the S&P report next week. So you're just a little over halfway done on the utilities. It's a big week in that space. Now they're utilities, right? As a whole, I don't expect a whole lot of fireworks.
Fireworks is 0.5%.
Every now and then there's somebody though, right? But yeah, I mean, I think
that's when they burn California though.
Yeah, well, that is true. Well, that was a different story altogether, right?
I think PFG. Who had PFG on their tackle bingo card today?
Oh, there you go. It definitely it was a constant winner, not all that long ago, right? It got brought up a lot. But this is exactly right, Maddie. You like it better, but you probably aren't upgrading it, right? We've seen that upward movement. We're starting to see, and I want to go in and to maybe look at your 30-minute chart or the hourly chart, because we're starting to see the reversal on the intraday, which is kind of now getting us lined back up with the longer term chart, right?
Look at that consistency there, Frankie, on that downward movement. And guys, for those of you who just kind of found the market post-pandemic, you haven't seen a lot of these beautiful short-term bearish, bullish retracements in the market form. This is picturesque. This is orderly. Is Sistine Chapel type. This is a beautiful.
You're going all out.
Well, it's utility, so I can't do that. But you tell me, you find me a cleaner short-term retracement than that.
That's pretty.
It's very, very nice. And it should open up for some very interesting candidates. The utility ETF still, I think, something that we can consider with all of those earnings, but we do have, quite a few that are behind us, which is always nice. It at least feels like if I want to trade into that, pullback, I'm going to have options. Whereas last week I wouldn't have felt that way, right?
Yeah.
Even though the technicals were still, just in the beginning phases of that pullback, or at least earlier phases, I have a lot of options. I definitely think that that's a place that we kind of want to peek at going into early next week. One of my favorite, setup, early week setup sectors going into next week.
Well, I mean, call me crazy, but the two sectors that I think are the cleanest technical patterns are utilities and real estate.
I think you're absolutely right. Although healthcare, that pullback is awfully interesting to me.
The healthcare
as well. But yeah, at the real man and the REITs have been hot, right? I mean,
and there are a lot of those big name REITs are post earnings too, and they're all high base, looking ready to rock once that sector breaks out. So I think when you're looking at the rankings, real estate, utilities, and most likely healthcare, even though healthcare was down a little bit more on the week than the other two candidates. I still think you like these patterns in the sectors. You gotta like the healthcare retracement. You gotta like the utilities retracement. And what's not to like about the consolidation, high base potential breakout in XLRE here? And so a lot of maintenance in the defensive areas of the market, in my opinion, with Staples Healthcare, the REITs and utilities. But specifically that healthcare retracement, the utility retracement, and the high base momentum based real estate pattern, those are real three trends and patterns that could get gobbled up pretty soon. So I like those patterns. A little maintenance though, but you got to like them more coming into next week than they were this week. They were forming their patterns coming into this week. Now those patterns are a little bit more concise, a little bit more they're more fully formed so that we can look at triggers here. I like both sides of it, but again, from a rankings perspective, you are most likely looking at maintenance, but looking forward to having that conversation with the coaches. Industrial, a little bit of consolidation, just trying to find its legs here, battling a little bit of supply side headwinds that has kept it down a little bit. And then the finance breakout is probably going to get upgraded.
Yeah. Mm-hmm. Yeah. And obviously, if you're a pro member at Tackle Trading, you know that we put all those rankings together for our newsletters, which are posted on Saturdays to keep you guys updated on the marketplaces. So, look forward
you get
to that.
Coach Gino's analysis in the Tackle newsletter. Get you get the full picture of everything that's happening in the market. Coach Gino does such a fantastic job with the newsletter.
Wonderful. Let's flash through commodities real quick if we can. Gold's an easy one. Let's start there. Gold is kind of just hesitating here in this developing pattern and trend. Matt, as long as it's holding those MAs and that little breakout point that we had, I feel comfortable with what's going on here. But what about you?
As long as you're above 1750, I could care less.
Yeah, me too.
Yeah, I think that's a good way to look at it.
Crude oil hesitating at the top of its range over the last couple of months. It's had a nice developing chart, still above that 90 EMA, a little bit off here today. Actually recovered a little bit. It's down a little bit more earlier. Frankie, what's your read here on crude?
Still a tough place in my opinion. Nice move off of that support that formed last week, right? And a nice breakout here yesterday. I wish there would have been some follow through. You never love when you see, at least I never love when I see a breakout and then the very next day it gives it back, right? You much rather see the follow through to get the commitment level of the bulls, right? But at the same time, we have now technically made that higher high to go along with that higher low that we were trying and obviously succeeded in doing last week. So I think if you are, and again, I'm very, very simple when it comes to how you trade crude, and that's only as momentum. So, speaking my book, I don't really, like this type of a pattern for a crude oil, but any pullback, as long as we hold this trend line that has now developed, right, which would probably put us somewhere in the 60, 62-ish, 62, 63 range. Any pullback into that could be something that we could play. Any follow through off of this week's high would be a nice bullish signal, in my opinion. And if we can get that, technically we still are in that range. But if you think about what this chart really looks like, it was a deeper pullback. We're still somewhere between halfway between support and resistance, right? A little bit closer to resistance, but not much, right? Our support level still down in that 57 range. Our resistance level still up at that 67 range. So we're working with, kind of developing a trend within this range. So we still want to be keeping an eye on that 67. But if we can follow through this, I don't see why that's not a legitimate conversation that we're having a couple of weeks from now.
Fantastic analysis. Appreciate it, Matt. Anything you want to add to that?
No.
Yeah. The dollar, I thought it was spot on as well. The dollar's bouncing off of the bottom here today, a little reprieve candle after some selling over the last month. Matt, old pivot point right there, about 24.60 or so that we broke down on a few weeks ago. Now, this is a pretty good bounce here today in terms of the dollar. What's your read here technically?
Gross. It's just gross.
Think about this, though. Dollar bounce, gold holding,
Yeah, that's the takeaway.
Yeah.
This is not reverse trend or anything. It's an update in the dollar based on a positive economic report and the very negative economic report that came out of Europe, the double dip recession that is confirmed now in Europe. So economically speaking, currencies are extremely sensitive to economic data. Yeah. And on a day where Europe double dips recession and America is like, we're going to spend all our money. Dollar's going to appreciate.
Got the double whammy there today, finding a little bit of short-term support. We'll see where that thing plays itself out. And then Bitcoin did have a little bit of a bounce day today, but it is in the larger range that Frankie was talking about. Actually, it's starting to strengthen a little bit here, even in the last hour or so, up 7% now. Matt, what is your read there on Bitcoin?
I honestly don't have a technical read until it forms.
Yeah.
It's still tough, right? But you do, because you're probably a Bitcoin bull or not a Bitcoin player at all, right? That's pretty much the way it works. You do gotta love the way that we, had that, fire back off of the low Friday. Obviously, the next candle, beautiful. bounced back. We dojied, a couple of days ago, showed some downward movement, maybe, some sort of a bear retracement, kiss goodbye type of pattern, blew that out of the water here today, or at least are darn close, right? Now we've at least kind of reestablished a little bit of intraday higher highs and higher lows. So I do think you have to like to see it. I do think if you're trying to swing trade this, though, this is the type of chart that can get you into trouble, because your risk to reward, no matter really what you're doing, ends up being pretty poor. Where you put in your stop losses, how far do you have to set your targets away to make that work? So I still think from a swing trader's perspective, we need more development here on Bitcoin, and I probably will feel that next week as well. But we have certainly shown a dramatic change in the momentum from where we were last week at this time, right? Which you have to appreciate.
It got ugly real quick, and it still could, obviously. Matt, you've drawn this box here that kind of describes that longer range that
it's neutral. It's neutral until it breaks.
Yep, and that's why it's a tough place for swing traders, right?
Because swing traders, they're not going to even look at this. They should not even look at this chart.
I'd agree.
There's the only thing you have is hope. That's it.
Mm-hmm. Fantastic.
You do not have technical analysis here to support any trade.
I would agree.
Let it set up.
And again, because you don't have a trade doesn't mean it's going to go to 20. No, that's not what it means. It means you do not have a technical trade. That's all it means.
Yep.
Doesn't mean it's bad. Doesn't mean it's good. It literally means it's nothing.
Nothing burger for now. All right, let's move into stock talk next, and Frank's charts we'll do a little in a few minutes. Matt, you've already hit at several of the major earnings ones, kind of talking about some of the numbers out of Chevron, Exxon, and Amazon. But what else you got? What do you want to run through here?
Oh, I just wanted to look at a little bit of a catastrophic gap. That's all I wanted to do. And that is Twitter is my last earnings roundup here today. Twitter reports 16 cents a share versus 14. Revenue came in at 1 billion versus the expectation of 1. Revenue increased 28.3% year over year, and the affirmed guidance. Tim, I didn't dive into the detail of Twitter's report, just raw numbers here. Raw numbers are passable. You must have said something.
Well, they were talking about user data. It didn't hit where they needed it to be, and they actually lowered how many users they think they're going to accumulate for the rest of the year as well. This is one of those, Matt, for me, and you tell me what you think. If you don't blow out and you're a Twitter, you've got to come out and do something to impress the market, and they just didn't do it. And just having any negative commentary about their active users, guidance for the future, the market did not like it. Did not like it. So obviously
I've seen enough nonsense and craziness over Twitter's earnings response to the numbers that everything anybody says on Twitter on earnings is just a hot take.
Yeah.
Well, anything anybody says on Twitter is a hot take.
It's a hot take, literally 100% accurate, Frankie. No, it's just Twitter's it's a tough stock to analyze, quite frankly.
Yeah,
it's got some random volatility and some. I'm not a fan of trading this stock. Let's just put it like that.
It's not been a good trading stock for quite some time. All right, that's it for most of the stocks here today, guys. There's a couple upgrade, downgrades, that kind of stuff, but this has been a busy week of earnings season as we've been moving through the markets. Let's move right into Frank's charts, because this is what we get excited about when you get out of earnings season, Frank, because you got the potential for some of these plays that have developed. One
of my favorite segments is Frank's charts. We just need a better name. Frank's charts.
Awesome.
Listen, it's straight. It's to the point, right? Not too fancy. It's fitting. I think
it fits Frank.
It does fit me. It's almost like I picked it myself.
Yes. Yeah, what do you want to call your segment, Frank? Frank's charts.
That works for me.
That's what I'm doing. I'm bringing up my charts.
Yeah. No, nothing fancy.
What do you got there, Frankie?
All right. Let's start with OKE. One of our old Tackle 25 friends, right?
Yeah.
So I really like what we're seeing here on Oak. We came through with an earnings beat, which is, I'd rather be, beating earnings than not beating them, right? And it really didn't destroy our little high base, cup and handle, whatever you want to call this development over the last few weeks. We have stuck our nose, got a little intraday nonsense the last couple of days, but I really like this for a breakout play for a couple of reasons. One, the way we've worked our way up, right? Especially we broke out of a major pivot, kind of the pivot that established itself last June, broke out of that, had a nice run, gradually pulled back to that old resistance zone, tested as support, rallied back up, and now we're just smacking our head over and over at resistance while we're holding and building our support levels. So I like the way that we've got here, and I like where we could go from here on the break itself. There's, I think, 3 levels that I'm looking at here on Oak. The first one is going to be the 200 weekly moving average. So we are going to have to deal with that. That's going to put us at approximately $55 and some change. I'm not exactly sure the number there. About 55.50 is about where that is. I always respect the 200 weekly. I just think that's a good practice to get into. But there is a nice little path from this breakout point until that resistance level. Where it gets exciting, though, is if we can win that battle. And while I would expect it will be a battle and we might short-term lose it, I do think that a fair fight that we are going to have there. What gets really exciting is moving into the $60 or even potentially the 63, 64 range. There's just not a lot that we have to grind our way through as we try to work our way back up. I mean, it wasn't that long ago. Well, I guess it was a while ago, but not that long ago, we were almost $80 on Oak, right? I'm not saying we're flying back to $80, but I do think we kind of have this stepping stone of windows where if we can break here, we've got a pretty clear path to the 200 weekly, just north of $55. If we can win that battle, we have a pretty clear path to $60. If we can win that battle, we have a pretty clear path to 64. Obviously, I'm not thinking this is necessarily going to happen on one swing trade, right? I'm going to hope so, but I'm not going to have that expectation. But I do like the development. I like the windows that we have to work with going forward. Even if I miss this breakout trade, and don't get into it until it breaks the 200 weekly 3 weeks from now, still think there's some really good opportunities.
Mm-hmm. Mm-hmm.
Yeah, I definitely see it, Frankie. You're right in the zone. And you see this little downward movement here. We're looking at a weekly chart. We're looking at long term, trying to truly understand the importance of this potential breakout, right?
Mm-hmm.
And so you're looking at this on the weekly chart, and you see a fairly important support level right there. That's kind of in the cluster of the consolidation over the course of the last month. If you do break out, and it's not exactly clean, I'll get into that here in a second. But if you do break out, you're stepping stone to 55.5 to 60 to 64. Like you can see now, again, it's a utility stock with a little bit of an energy kicker, but it doesn't move that way.
Right. Yeah. It's not flying up to 64 realistically.
No,
right? You're grinding your way up.
It grinds to 55.5 and it retraces to 54. It grinds to 60,
Correct.
retraces to 57, grinds to 64, retraces to 60. I mean, that's the trend analysis, right?
Mm-hmm.
That happens when you have that type of breakout. The only question I have, because I definitely see it, but the only question I have is, do you like OKE more than some of the other energy plays? Do you like OKE more than some of the other, say, utility crosses? And again, this is an energy stock, not exactly a utility stock. But it's got cross in it.
Yeah, it's got on the energy side, yes. I do prefer this to many of the other things I've ran into.
Mm-hmm.
So on the energy side, yes. On the utility kicker side, there's probably cleaner pullbacks. So I think it comes down to where you sit on that. And this would be a little bit more of a married. It's not quite a swing trade. Maybe it's not quite a position trade, right?
Mm-hmm.
Type of
it's a position trade that you will micromanage if it really struggles at that 200 weekly.
Yeah, I mean, so yeah, right. You buy a call option, you sell a call when you get into that 200 weekly, or you buy your shares and turn it into a covered call at that 200 weekly or something like that.
I love the pattern coming into it, Frankie. Cup, handle, ascending triangle, however you want to put it. As long as you have increasing support with a horizontal resistance, that's going to be a pretty decent pattern.
Mm-hmm.
Do you have any concern with the 2 wicks here post earnings? And the reason I ask is when you put it on a 30-minute chart, you got a double top there.
Sure.
It's not just one tick here. I do think you got to be concerned. So if you have to be concerned about the 53.30, does that change your analysis at all?
If you're overly concerned, it might, especially on that first. You're probably looking for that to happen, then looking at the pullback off the 200 weekly, right? Mm-hmm. So you're probably looking for the next trade setup after this one. You could, if you're not overly concerned about it, it's some wiki nonsense in the middle of earnings season, right?
Mm-hmm.
I'm not terribly surprised to see that. We could use some sort of a scaling in methodology, which is kind of my personal game plan. On Oak, I'm watching the intraday to kind of scale in on this pullback and follow through on the breakout itself to kind of get an average cost basis down a little bit. That's kind of what I'm looking at. from a setup perspective. But if someone were to say, Frank, I'm not playing this because it's got to take out that 53 double top on the intraday, and I don't feel like I'm going to get, at least 1-to-1 on the risk to reward getting up to that 200 weekly, I'd say I get it. I think that's perfectly understandable.
Yeah, and there's other oil and gas midstream companies coming out reporting next week, and there's some decent patterns coming in. The oil and gas midstream charts have been a little bit better than the energy charts, but this one's pretty clean, Frankie. It's pretty clean.
I do like it. I do like the response to earnings. I do like where we're at, and honestly,
I couldn't veto.
I mean, the only and it is, the 2 wicks at the top, they're not as they
can
make
wait till it closes above it.
Sure, you can, because it's not like the 200 weekly, the $55 or approximately there has to be your target, right? It's more expectations. If it struggles here, that's not going to catch me off guard. I hope
we anticipate, given the fact that it did play a role here and it did play a role there. So
exactly, and
you can anticipate it.
Exactly. So this is one that I think is going to be in the watch list going into this quarter, and I think there can be several opportunities for those shorter term trades. I don't think we have to look at this as let's play the breakout and fight until we lose, right? We could, but I think
I would see it more as a position trend trade.
I think that's what you're kind of looking for. But by identifying these windows ahead of time, right, where's the likely bursts on an oak, right? Well, we get to the 200 or the 200 on the weekly, we consolidate for a week, and then we push through. That's probably where we get a big burst of price action if that's how it plays out, right? So we can kind of about where we might see these shorter term price action. Do we know that? Of course not, right?
But, you know me though, I microanalyze every technical thing, and I am microanalyzing those 2 wicks. This pattern here, this pattern and trend when you have a increase in support, pretty clean horizontal resistance, typically leads to some pretty decent breakouts.
Yep.
And so you do have a little bit of wick nonsense. There's no doubt about that.
Got to deal with it.
Position trade though, trend trade, I can't veto it. I like the analysis coming into it.
Mm-hmm. So, all right. And Tim, okay, I don't believe that, Tim, because I heard not 1 but 2 mm-hms from you. We'll talk about that later.
We'll overanalyze that like we overanalyze these 2 wicks.
Exactly. Tim's like, well, thanks, guys. Appreciate that.
What do you got next? Can you top it?
So I don't know. Let's talk a little bit. If we're looking to play this gold pullback, right? There's going to be lots of ways that we can do that. But what do you think, Maddie, about AEM?
Agnico.
So if we're looking at gold, we've seen the breakout. We're holding that breakout, channel, right? And as long as that holds, we have at least something that we're liking about it. Tim, Matt, what could I talk either of you into? And again, this is going to really be predicated on the fact that you want to move into the gold pullback, right? Could I talk you into this pullback? Probably need to get above 64 right now. Can't say for sure where our entry or trigger price would be necessarily, because we haven't seen that upward follow through like say maybe we did in the utility sector, but we did have a huge run up, flagging nicely. Very, this is another one of those, Maddie, if we go in and look at it on that intraday, we're say, wow, that's really well behaved on that pullback, right? Very, very well behaved.
Double bottom at 63, easy stop loss placement.
Mm-hmm. So cheap risk in a spot that may be interesting for you. And again, this one's, people have opinions about gold, right? For the most part, I think most of us at Tackle Trading share the same opinion, but I know we all don't necessarily share that opinion. So what do you think, Tim? Is this something that from a pullback point of view, if I'm looking to add a little bit of gold to my trading going into next week, could this be something that I could sign you off on?
Couple of things. Number one, obviously the entire space has kind of been moving in this direction for a couple months. They're going to trend in a correlated fashion. We broke down the Newmont earnings yesterday, which the price response on Newmont kind of, brought it below the pivot point, not as clean as a pullback as this Agnico here. I'm looking at gold stocks right now, Frank, obviously comparing them against the industry. Barrick Gold's looking very similar here to AEM as well.
They have earnings though, if I'm not mistaken.
Earnings coming up in front for them. So a similar pattern, but then the AEM has the earnings behind it. So that's the obvious going to be the advantage to AEM. I like it. I like gold in general. I've been playing it through GDX personally the last little bit. I have, that's the way that I've built my positions around gold. But if I am looking at the nature of that AEM pullback, the one thing that stood out to me immediately when you brought the chart up was the nature of the candles on the pullback. Just daily lower, lower, which is an orderly hourly chart pullback as well. Allows you to map out a clean stop loss, like Matt had talked about, right there on the bottom of those pivots. So I think you kind of have your dealer's choice here, and I'm approaching this through GDX, but I would have no criticism to somebody wanted to pick AEM.
Cool, Maddie.
It's what's your favorite gold miner moment?
Yeah.
Yep.
Right. And so AEM, there's nothing wrong with it. It's a good stock. It's the 5th biggest gold mining company out there. Honestly, gold miners is GDX or whatever your favorite miner is, typically, right? And so my favorite miner would be the 2 big dogs, Newmont and Gold, right? And when I want some silver, I sprinkle in a little WPM to fit my appetite.
Sure.
AEM, when it stands out against its counterparts, and right now I think AEM is pretty much in line with its counterparts right now. And so it's pick your poison. I got no problem with this pattern, though. This pattern is a really good pattern. And, as long as it confirms, and that's the eye of the beholder, but as long as it confirms and probably get above that 9 EMA, you see it right there, playing a little bit of role. But Frankie, you're absolutely right. You got to love the consistency of the intraday analysis. You got to love the double bottom here.
So
right?
yeah,
You love the double bottom there.
It's definitely one of the cleaner individual companies, I thought. And as Tim pointed out, it's got earnings behind it, right? So I don't have that nonsense, because I agree.
What
I like
you
the way
don't have is confirmation yet.
So no, you do.
Right?
You need,
and that's what you're waiting for.
Some upward movement, and at right now, at least probably super aggressively, at the very least, that would be today's high, right? And that would probably be
and that also gets you above the 9 EMA too, though.
Yeah, and that's what you want. And when you're looking at these pullbacks, I think this is something to always keep in mind. What you want to see is what we're seeing on that intraday, right? Where we have that double bottom potentially. We haven't confirmed that double bottom yet, though, right? But if we do confirm that double bottom, if that holds and we take out resistance, that's going to give us the 9. That's going to take out that trend line, or approximately take out that trend line. So that's going to kind of get a lot of one-sidedness on the chart.
And
right?
Frankie, if we had a little bit more time, and maybe we get this more time on Monday when more data comes in. But as of right now, you got a very clean support level forming right there at about 63. You do not have a very clean resistance level forming on the intraday, which means it's a little bit difficult to trigger on, which means you just use the high of the day. If you wanted to take advantage of that, you just use the high of the day that coincides with the 9 EMA on the daily chart. You just trigger there. You give it another day, maybe we get a little bit of a double top somewhere that we can have a better understanding of where that resistance level would form. But again, I look at the space, I look at the position, I look at the zone it's in. Technical read is pretty clean here. I like literally AM once again. It's just not the stock I personally would pick, but it's a beautiful chart, and they're both going to work out.
Yep. All right. Good deal. All right. This one's a little, well, it's not too far away, but going to need a little bit of movement, and that's Intuit, INTU.
Ooh.
We've got a cup and handle triple top breakout developer on our hands. I believe we need a little movement, right? We've got a little ways to go. I think at this point in time, we don't want to get too crazy about front running that breakout. We've just seen too much evidence at approximately 420, right? Just resistance. I think we do need to make sure we get through that. Our opportunity to buy in on the pullback was last time, right? This time I don't think you can. But again, that's just me.
This time you like the consolidation coming into the 420 breakout. I mean, that's what you're looking at. Last week, you're looking at the retracement coming into the 20-day moving average. That trade's over. Now you're looking at the breakout. So but I like the 420 breakout here.
Very clean, right? Yeah. We still got several weeks, I believe, before earnings. So we should have a little bit of time to work with these characters. Gotta like what you're seeing on there. If we can hold these lows and take a run, hopefully next week, because we don't want to get too close to earnings, right? Or we don't have time for it. But very easy one to get in the watch list. Hey, it'll either break out or it won't, right? And if I got it on my radar, I can set alert. And hey,
it's definitely a watch list candidate
for sure. Yeah, I'm always going to throw something like this in my watch list. That's for sure. Another breakout that probably doesn't need as much time, could probably happen as early as Monday. I got
Frankie, can I just point out one very quick thing? breakouts in this trend that it was having was not great. And so if you're looking at the potential breakout here, didn't work out. Potential breakout here, decent. Potential breakout there, didn't work out. That's not my read. My read is more that breakout right there.
Mm-hmm. Yeah.
Cup, handle, consolidation, breakout, run. Cup, handle, consolidation, breakout, run. And so even though it has a choppy history or a mixed history of successful breakouts, I do look at the one that had a very similar pattern to what we're going through here.
It's a good
that
call.
Breakout, legit. I like the breakout here.
Yeah, that's a good call. Yeah, I think they very, very similar to one another. And I know M just showed up, so we'll do one more, and then we'll give
Queen.
M the floor. And this one's just a quick, easy Foot Locker. FL, another little breakout candidate. Fought
yes. Above 60.
All week long,
Good.
right? Yep. Nothing crazy. That one was fast, and now we can get to Coach M. How you doing, M?
Hey, Frank, how are you? It's Friday. I hear you're on. I just have to come in and just check and see what you were bringing to the table today.
Well,
We know when
I
Emily
need
shows
some
up.
picks. I need some picks for women in trading tonight. So I came to steal some of your good stuff.
We know how it works.
Hey, that's why we're a community, by the way. We share picks all the time. That's the whole
course.
point of it. But Emily, you do appear here on Friday, and obviously you have an event here tonight. We talked about it a little bit earlier, but kind of preview it for everybody out there. Let's get this thing promoted, and let's get the ladies out to attend your event tonight at 8:30 Eastern.
I am, ladies. Tonight it's our monthly Women in Trading webinar. We're gonna, talk about one area of trading options that usually we always have to kind of go back and forth and decide, do I go naked put or do I do covered call? And I wrote a blog about it earlier today, so hopefully you guys got a chance to catch it. But join me tonight. We'll explore more on how, when is it, appropriate to trade a naked put versus covered call, and all things ladies that we do on a Friday night.
I would love to attend. We were talking about the running joke that we don't ever get to show up. Matt actually claims he has tried to show up to this webinar and been thrown out on his butt a few times.
Okay, hold on.
I've known Matt a long time. That's not the first place he's been thrown out of. So
This is accurate. This is accurate. Frank's had my back in those moments, though, Frankie. Except the one time.
But,
we won't talk about that one time. No, Em, I have gotten into one of Em's shows. She did find me and remove me within 30 seconds?
Yeah.
30 seconds?
You didn't last that long.
I can still see how it's
Phil.
I don't even know what my
Uncle
name
Phil
was.
throwing jazz out. Remember from Fresh Prince? That's how I threw you out. It was very
Mateo or something like that. Like, Matt, we can see your name, Matt, in the name. And it's not Matt. It's not.
You didn't do a very good job of disguising yourself too.
I didn't. I didn't. Em, you did such a fantastic job with women in trading. I still remember the moment you brought that to Tim and myself, and you had the idea, and it was a beautiful thought. It was a beautiful intention, and it still is today. And I just want to tell you publicly how amazing and how impressive and how proud I personally am just to be associated with you. Because it's people like you that really put the positive into so many things, and it's a beautiful thing. And I'm so happy for the Women in Trading group, and you guys have a great time. And can I butter you up more so I can get an invite? Does this?
I don't think it's gonna happen.
You can butter up some more. You can still give me some more buttering up, but it's not gonna work.
At some point, I am gonna start. This is discriminatory, and Emily's gonna be like, Matt, you need to shut up, and I'll be like, okay,
you know what I'm gonna say?
Right.
I don't care.
Yeah, and that's how our conversations work, right there. 100%.
That's typically how they go. And I'm going to tell you, go in the corner and woosah, and you'll be fine. Yep. But, thank you guys for giving me this platform to be able to come out and talk to the ladies of these amazing ladies of tackle trading. We always have a good time. So I can't wait for tonight. I'm excited.
Yeah, me too. Me too, as always. And now I got to find where the Fresh Prince of
When do
Bel-Air
Tim
is
and I
streaming.
get to drink wine and hang out with the crew? When do we get to do that?
We don't.
No, we don't. We don't get to do that.
You did that last night. We could have done that last night watching the draft, but you missed that chance.
Emily, what'd you think of the draft, by the way? My Chicago Bears got a quarterback.
That's all he wants to talk about.
That's all I want to talk about.
Yeah. Uh, it was a good draft. I'm surprised we went and picked a defensive guy on our first round. So, we'll see what happens. It's always like, it's all a wait and see. You get the hype, and then it's like, all right, let's see what you do on the field now.
Yeah, Tim's like, Emily,
So-
I don't care about the Washington football team. What do you think about the Bears?
We got a quarterback.
This is all about me.
Let's not talk about you.
It was a good pick. It's all about you.
Oh,
Tim
we're
got a
excited.
shiny new toy. He got a quarterback.
We're excited
We
in
did.
Chicago.
We all did. We all did. Everybody did.
Yeah.
Absolutely. By the way, some earlier ideas for Frank's segment I did see. I wanted to give you guys a couple of reads here. Detailer says, Diane says, Frank's fabulous charts. Jabel likes Frank's famous charts. Greg Nyberg,
Famous Frank. Oh, we can go with this. FF, baby. Famous
kind of
Frank.
like this one, Franken charts.
I kind of like that one too.
Frankencharts. I like Frankencharts.
Franken charts pretty good.
Frankencharts. Frankenstein, baby. Frankencharts. I like that.
Frank's
I-
tanked charts.
Oh,
Yes.
we could get Christian to create a logo of Frankenstein crossed with Frank's hair, and it would be like it would literally be. And all I would tell Christian is, Christian, I want you to think about Frankenstein and think about Thor. And if we married Frankenstein and Thor, what would that be? And Christian is going to be like, I got you, Matt.
It's amazing what Christian can come up with just such little.
He is a
That's
He's
all it
so
takes.
good at it. Yeah, you don't have to tell him much.
That's all it takes.
Did you
He
see
is a
him being Tony
genius.
Montana?
Oh, it's hilarious.
So funny. As a matter of fact, it's so funny.
There's nobody he loves more from American entertainment than literally like Pacino's character out of oh man, I'm having a brain
Scarface.
fart here.
Scarface.
Yeah, Scarface.
Yeah. Well, he just loves all
Tony.
of those type of films. I mean, that dude, he's just into that type of art. I just want to sing the Chicago Bears fight song. So
No, Lord.
Oh, hey, Tackle Train. This is the point in the show where we're done talking stock.
We're done.
We're talking shop at this point.
oh goodness.
This is the exact same conversation that we will have as we stop having the record button up. We won't stop. We'll just continue the conversation.
That's exactly right. By the way, being done with the week here, done talking stocks, let's wrap up with some
Oh,
final
Mark knew
thoughts
we
here.
were talking. He came in here.
Mark heard Chicago Bear fight song. He wanted to show up.
Is that what he heard?
No,
I'm sure that was it.
I don't think that's
like
what he
moth
heard.
to a
I don't
flame.
think so.
Mark, come on in here first. Popping in as you always do to help promote whatever we're doing, kind of talk to the team. I know you've got your Friday show here in just about an hour and a half that you talk to pro members about. Come on in here and talk about it for a sec. You're on mute, sir.
You never tell him. You just let him figure it
I
out.
know. I just
Listen.
couldn't.
Bear down, Chicago Bears, make every play. That's a terrible song. Like, it is just.
You don't even have the cadence.
I
down
thought
right.
you were going to commit for a second. I was like, oh. okay.
He looked up the lyrics and he doesn't know.
Yeah, because it's a terrible song, you know.
Sing the BYU
Anyways,
fight song.
but what is not terrible is an hour and 20 minutes. Meet with pro members. We do our Mind of a Trader at the closing bell every hour before the market closes, and we do commodity reports live. Love the world of commodities. It is just a cash flow palooza. And then, of course, Women in Trading, which I'm sure you've covered, is tonight at 8:30.
Absolutely. All right, Matt, final thoughts.
Oh, it's been an amazing week hanging out with the crew. I look forward to another amazing week hanging out with the crew next week. Between now and Monday, when we get to talk to you guys again, we got scanner reports. There's 4 of them: stock, options, commodities, and the Forex report. You can also check out the Tackle newsletter. Get your weekly routine done. We're about halfway through earnings, but like I said, that's when we start seeing some real good technical setups start forming. We're going to start seeing those this week as well. I'm excited for that scanner report meeting. I am very excited for those scanner reports coming out this week. So make sure you're doing your weekly routine, and then we will see you bright and early Monday morning. You guys are the best. Love you guys, Team Tackle. And hope you enjoyed the draft and got your guys' shiny toys you can cheer for the next foreseeable future as well. Until then, we are out.
We're out. Great job, everybody, today. Thank you, Frank. Thank you, Emily. We'll see you guys on Monday.